Hi, I'm Keith McCullough. Welcome back. Today I wanted to talk about what happened in the U.S. stock market yesterday, what happened in global macro markets really overall on this taper decision by the Federal Reserve. Now, to be perfectly clear, I did not expect the Fed to taper, and they did. So that would make me wrong on that. Secondly, Bernanke's decision to taper, to be clear, it is true that what he did was the right thing to do. Now, the right thing to do may have happened on a 3-month lag. He should have been tapering since September, but it doesn't matter at this point. It is, in fact, true that a tapering decision is good for the U.S. dollar and it's good for U.S. purchasing power, which therein embeds a very good U.S. growth expectation, which we've had throughout the year. So what I want to go through is 3 separate true or false questions, because again, if you make a mistake like I did on the no taper, the next thing that you need to do is not make another mistake upon another mistake. So again, we need to get back to what kind of market we have, true or false. So the first question I have on that, and these are all global macro questions, does gold hate rates rising? True or false? True. Look, U.S. Treasury yields for the year to date up 112 basis points. Of course, rates rising and gold down, crashing at this point, 28% down year to date, and falling, I might add, right now. Gold hates rates rising. So to get gold right, you have to get that taper right. If we taper, the dollar's going up, rates go up, gold goes down, and violently so. Second question, true or false? The Nikkei, the Japanese stock market, loves burning yen. Answer? True. The Japanese stock market absolutely loves burning yen. That smell of the burning currency. I mean, this is what the U.S., of course, has tried. It doesn't work. It has never worked for any economy, but it can work for the stock market. Don't forget that the Venezuelan stock market's up like 430% for the year to date. But again, Japanese yen down 17% for the year to date versus the dollar. That is an unequivocal crash in currency land. At the same time, the Nikkei is up like 55%. That's just fantastic. I don't know what else to say about that. Third question, true or false? Dollar up equals emerging markets up or down? Dollar up equals emerging markets down? This is not a trick question. The answer to that is, of course, true. Dollar up equals emerging markets down. Okay, how many people missed this? But again, for the year to date, and again, this is why it matters yesterday on the margin, because of course the dollar was down for 5 consecutive weeks into the catalyst. A lot of people, by the way, didn't think that the Fed would taper, so the dollar was going down into that. The Fed tapers, the dollar goes up. It's back to up 1.1% for the year to date, and emerging markets are down 6% for the year to date. Look on your screen today. What's down? Emerging markets. So again, to recap, you're going to make mistakes in macro. I would bet if you have a money manager or an advisor who has a nice little pie chart, who had all these exposures this year, they wanted you to be long gold, they wanted you to be long bonds, they want you to be long emerging markets. Guess what? That was really, really, really wrong. Now, I get things wrong, but that's a big one. Now, again, if the dollar were to continue higher, you don't want to be having a pie chart full of gold. No, you don't want that. Look at it. It's what's dragging down your portfolio. So is emerging markets. Again, true and false. The market tells you the truth each and every day. And that's how we roll at Hedgeye. We're trying to find the truth. So with that, if you have any questions, I'm at Keith McCullough. That's my Twitter handle.